Good morning, everyone. Welcome to the European crossover webinar. And we did go in and get the German IFO numbers come out. 74.3 on German IFO came out. Current assessment or current conditions, 79.5 with new expectations haven't come out yet. New expectation numbers, 69.4. A little bit late in each of those, but anyway, they came out. So we did have retail sales come out for the UK. They came in at negative 5.1%. Reuters polls for negative 4%. Year over year, negative 5.8 was expected, negative 4.7. German IFO, as I said, expectation was for 80, came in at 74.3 on climate. Current conditions was expected 81, came in at 79.5, and new expectations 69.4 actual versus polled 75. We do have some Mexican data that comes out at 7 a.m. Eastern, and then here in the States at 8:30 Eastern, we do have durable goods as well as final University of Michigan numbers at 10 a.m. Eastern. Obviously, the big story, we saw the big swings here in the States in equities. One of the things I was cautioning at the time as we came in, remember I was referring to, the way the crude oil had rallied, and it was setting up for us to hit some stops in the equities on the open. And NASDAQ was pressing higher and then began to start to rotate a little bit lower. And then the Bank of Japan news came out about the unlimited bond buying, and that set us off on a spark, and the spark we did get. I mean, we pushed up, and remember I was looking at 28.15/18. We did see a dip there. Then we reasserted ourselves, and my stretch was potentially, we talked about it, 28.29. We got there. We actually pushed up as high as 28.37 before rotating, and then we came down. We came down to 28.16 or 17. We pushed back up. I actually took a break for lunch, and then all of a sudden I came back, and we had just dropped down here, and I think we were starting to come back up in the after the Gilead story, and then we just went up and down like a yo-yo before coming back down. In Asia, we really pressed it a little bit lower here. Holy smokes, I didn't even see that right now. We got as low as 27.55. We've kind of rallied back a little bit. So it's been quite the move here. Unfortunately, a lot of people who were short got stopped out. The Gilead stories would really turn things to move lower. Although, like I said, as we're coming to the equity open, I was cautioning that we were going to hit some stops, that the market was prepped. Now, like I said, the NASDAQ had already begun to rotate a little bit from that. But then the Bank of Japan news fueled it, but we were already set up for the stop run. And we pushed up, and once again, the rest is history. Pretty active day yesterday. Okay, and here's crude oil. We're pressing back lower again. Remember, look, we really had a pretty good run up here in crude oil yesterday. Look how high we got. We actually got up above. You can see here, when we got past 1672, I was thinking that they could press them as high and get up here to the 38%, which is 1750. And then we had a resistance level at 1770. They actually pressed up here to above $18. They stayed there for a while. Eventually, we did break lower. Really, the Gilead news once again really turned things much lower here. And we did see a pretty good little move up here in gold too. You can see here we had a little bit of a gravestone doji. We dipped back, not a whole lot, kind of come back. Key level there on gold is going to be right there. You can see it right there. Probably key level to get back above. With that, we'll go on and move into the news. So the dollar heads for a weekly gain as oil shock reverberates. The dollar is headed for its best week since early April on Friday as tumbling oil prices weighed on commodity currencies and division over Europe's emergency fund dragged on the euro. The dollar stands near a 2.5-week high against a basket of currencies. The dollar and is 9/10 stronger for the week, and it's up nearly 3% against the oil-sensitive Norwegian krona. Moves in the Asian session were modest and led by a drift lower in the Australian and New Zealand dollars as inconclusive results from a Gilead antiviral drug trial on patients with COVID unnerved traders who have been looking for headlines for direction. I'm running with a more bearish story for the next 2 or 3 weeks as Westpac analyst Emery Spitzer or Spitzer, however you want to say it. The economic data is going to be horrible. I'm betting that the markets will be shocked by it, even though we know it's coming, and that will cause risk in them to fall. And I believe that. I think that's right on spot. I mean, actually, when the story broke, I made money, although I didn't trade as aggressive as I should have, even though actually I kind of screwed up because on this rebound, I actually sold the top. Essentially, I got short at 28.16 and a half, and I think the market topped out at like 28.17 or something. I can, one moment. Let's see. It topped at 28.17 a quarter. I said it might get there, but I stepped in at 16 and a half. And, but in the chat room, I was saying this market is, I put in caps. It's over. This whole run is over. And yeah, because that's something that was really hanging their hat on. That's what I'm saying is I should have stayed, not only stayed short, but I should have been very aggressive. And but anyway, that being said, I am in total agreement with what this guy's saying. You know, it's just going to be bearish. This rally is over, over. They had priced in everything to perfection with this run up in here. I mean, honestly, if it hadn't been for the news, it probably could have got up to 28.54 in the spoos. You know, so this market has got a long way much slower to go at this point now. So he says the economic data is going to be negative. It's horrible. I'm betting that the markets will be shocked, even though we know it's coming, and it will cause risk sentiment to fall, which means selling pressure on the New Zealand dollar. The Aussie and Kiwi each shed 0.2%, holding the Kiwi below 60 cents and the Aussie at 63.59. Both had rallied through those levels overnight as markets shrugged off the economic news in Europe, and the United States and commodity prices forged ahead. The euro fell to a 1-month low of 7.56. We did talk about that key 7.76 level on the weekly. We actually rallied. We came up. We dipped later on. We dipped below that. We came above it, and we're really seeing this market turn around. And I mentioned here the key level was here. I said if we can get above 8.56, you can see right there, 8.56 on a 2-hour close, we will really take off, and we didn't. We got up to 8.47, but I said if we can get a 2-hour close above 8.56, this sucker's gone. But then the Gilead news is really, I mean, I know they had other issues that the European story has been playing all the whole long, but the Gilead story is what drove stocks lower, hence putting money back into dollars. But anyway, the euro fell to a 1-month low of 7.56 on Thursday, struggled to lift much above it on Friday after the European Union agreed to build a trillion euro emergency fund, but left the details for later. With Italy and Spain hit harder and Germany by the crisis, is it old enmities have surfaced across the block with faces to cut to output as deep as 15% across according to the European Central Bank. We have no idea how it will be funded, and this is not the panacea to stop the impending 15% contraction in GDP, said Chris Weston. The euro last set at 107.72. The pound was steady at 123.52, which is down about 1.1% for the week, and Japanese yen softened slightly to 107.64. Preliminary goods orders in the United States and German business sentiment survey due later on Friday are unlikely to improve investor sentiment's mood, and we saw that with the data. It depends on what you mean by the recovery, said HSBC economist Cedric Newman, who has forecasted an 8.4 annualized expansion in Asia, excluding Japan. The return of growth is comforting, especially for financial. There's not going to be any growth, but this guy's must be smoking crack. Seriously, I'm not even joking. Anyway, so let's go and move on to the next one. There really wasn't another FX story, so we're going with the oil. Oil prices rise, capping a week of historic turmoil over coronavirus. Oil prices climbed on Friday, adding to gains from earlier sessions after producers such as Kuwait say they would move to cut output in the United States, approved another package to cope with the turmoil. Brent crude was up 24 cents, barring a sharp jump later in the session, though prices are heading for their 8th weekly loss in the last 9, capping one of the most tumultuous weeks in the history of trading. Brent is headed for a more than 20% loss this week. WTI fell into negative territory, minus 37.63 on a barrel on Monday. The gains in recent days in no way mitigate the size of the week's sell-offs in supply-demand imbalance. Further strong rallies from this point will be challenging without clear signs that the peak of the virus is upon us. Under a deal between the OPEC, associated producers, including Russia, is known as OPEC Plus. Output cuts of 9.7 million barrels per day are due to kick in May, but Kuwait State News Agency said on Thursday the OPEC producers will begin cutting supplies without waiting for the official start of the deal. Azerbaijan's Azri Ganishi oil project will also have to cut output sharply. On the demand side, in China, where the coronavirus outbreak started late last year, analysts said fuel sales should pick up in the second quarter. Meanwhile, U.S. legislators approved a nearly $500 billion bill for relief from the pandemic, providing relief to small businesses and hospitals. Anyway, enough of that. We're going to move on to the analysis. Okay, so let's go and move into the euro. As the saying goes, thank God it's Friday. Holy smokes. Well, we talked about the 776 yesterday, and initially it held. We actually didn't, we came about 10 pips within it. It didn't even touch it. Later on, we went below it, but then we came back with a pretty good little vengeance. But as I said, the key was to on a 2-hour close to get above 856, and we did not do that. And then, of course, the rest is history. Although they said there was a lot of problems with the whatchamacall, Europe and their whole thing. Really, it was the Gilead story that kicked everything lower, because once stocks started selling off, you saw a rush into the dollar. So that's what happened. So that being said, where are we at? Well, you can see the support 726. That support here today. Knock off 50 pips. But the key thing is that we're below 776, and that's a weekly pivot, and that's huge. And then resistance at this point, well, you can call it the 776, but a little bit higher. It's going to be right there. You see there? If we could get above that, that would be key, which is going to be 793. Actually, it's actually 792. Let's go move into the cable. So we're still holding up relatively well. I mean, we actually bounced a little bit here yesterday, but we had a resistance at 2408, and the market got up as high as was it 2416? We had 2408. We'll keep the 2408. 2217 might be a bit ambitious, but we could still see a run into the dollar. We'll just go with the right there across the board, the 2228. Let's go move into the Aussie dollar. Well, we did bounce up a little bit here. I guess also with the energy sector doing much better, we kind of pressed the levels here. So we actually had 63.60 yesterday. We pressed up against the 63.97. So once again, we're just going to go with the straight technicals, and it's going to be 63.97 if they were to try and push beyond that. But we'll look how tight of a trading range it is, and we are quiet. And on the downside, 63.03. Obviously, the energy sector is what really helped. Let's go and move on to the Kiwi. It's also a good strong move here in the Kiwi. The 59.14 did hold. The upside you can see right there is that close. That's going to be resistance. 60.36. And let's go move into the dollar CAD. Quiet here, although we had our support for 40.84. They pressed them lower yesterday. They placed at 40 cents area here. I think it's going to mix bag it today, but not really a good level. I can say when we did work lower, we actually stretched on both sides. Look at that yesterday. We had 42.25, and the high was 42 cents. And then we had 40.84, but they did drop as low as 40 cents. We're just going to have to go with the 40 cents. That's it. There's not really anything standing out. And on the upside, it's the bottom area right here. You see right here? That's going to be 41, 46. Wow, dollar peso really continues to push up higher. Holy smokes, we got to pass that, which has been keeping it in check, the 24.61, the pink line. Um, this bar here, closing bar, that's going to be resistance, 24.95. This is going to be key intraday, but it's actually right here. We'll be looking at, which is going to be, let's rub it right there, 24.38. Dollar yen, oh God, that noise is so loud. Um, we're just so quiet here in the dollar yen. It's still going to remain the same, no changes, 715, 792. And let's go move into the cash dollar index. Well, you can see here we continue to press higher. And we may do another leg higher at this point. Going forward, I mean another brand new leg, because I would expect equities to continue to remain under pressure going into this next week. We did get above par 80. I mean, well, par 80 is a key, and that's where the resistance room, we had that in place right here. Resistance at this point is going to be right there at 101.09. The par 80 is key. I mean, that's what we're at. But I think we can still press a little bit higher, and that will get us to 101. Let's call it 101.08. But we said that if we can get above par 80 on a closing basis, it would open the door for 101.78. But for right now, immediate resistance will be 0108 with support coming in. Let's call it par 17. And let's go into the Kiwi yen. We had 64.95 and the market got up as high as what, 65? Let's think about 65.04. So I still like the 64.95. And on the downside, we had 63.68. And the low was 63.78. We're going to tighten it up a little bit, so the low is going to be right there, 64.05. This continues to press even lower. Look at that. Holy smokes. So on a weekly, we have the potential to come down to right here, which would be 1602. We're already below that. Right there. 1476, still a ways away. Oh, right there. 1511. They may press it even further. I mean, press it towards that area. So it's going to be 1511. Resistance is going to be what it's today's high, which is 1608. So definitely got below that 170 area. Kind of hugging this area here. And we're forming a little bit of a hammer. Support, you can see the lows on this day. We broke them and touched them. I think that'll hold for today. 68.82. And resistance can be right there. Actually, close there, which is 69.48. You can see support coming up. Good solid support here. Right there. 7906. You can see right there. From here coming across here. See that? 79.85. Now let's go move into the Oceania. We're on the slip here, but right here, there's going to be some support coming in right there. You can see it coming in off of these lows also. And right there in that body close, if we break lower, obviously we were setting up a hammer, but if we break, that's going to trigger some stops. But I think we'll see some demand come in here at 68.11. And resistance right there, 68.58. Maybe we have to push this a little bit harder right there, but that's just a little bit higher there. Break above there, 68.63. And on to the guppy. We talked about this rounding top, remember, at the beginning of the week? You see that? And usually you get a pretty good pull down on a rounding top. You don't see them very often. So potentially it's going to be right here. 32. And it can still break lower. We can actually eventually come down here. But for today, 32.14. And high is going to be right there, that bar, because I think the pressure is going to remain. So it's going to be 32.89. And cables has, well, I shouldn't say cable, I'm saying Sterling's had its problems across the board, and you can see it here with Sterling odd. Still a decent chance they'll break that, but we'll go with just these lows here, which is 93.35. That will trigger some additional selling. They may try and press that way, but it should be, see a pretty good fight there. Right there, see that come across? It's gonna be 94.26. We are seeing Euro trying to make a little stand here, but don't forget that the weekly pivot is 776. So it's going to have a tough time trying to get beyond that. And cable continues to remain under pressure. Peso still up here above 24.61. You can see here, crude back on its lows. Look at that. We just rolled right over. Yesterday we were at we're knocking on the door at $18. Look at us. $15 handle now. That may keep some pressure up. And Spoos, we'll just have to see. Yeah, I felt pretty strongly when we got that news. I was making such a big deal about, at least in the chat room, about this rally is over. There's no, and I feel that way. I should have traded it more aggressively, even though I did trade it. But I mean, aggressive in the sense that should have even hung on to the positions and probably pressed them in Asia. But I think that's the last of the good news. This thing had already had a phenomenal run up. Look at the daily, you see? And so potentially we could, had it not been for the Gilead, I think we would have made it up to 28.54. So you can see this, when you see this, that's it. This market should come down easily to 26.32 this next week. It might be towards the end of the week, but we should be able to get down there. Anyway, that's going to be it. Thanks for joining us here on the European crossover webinar, and good luck trading into the week, and thankfully so. Have a good day.